Good morning. This is George Tkaczuk with RCM Wealth Advisors reporting you from the CME Group trading floor in Chicago. This morning I'd like to talk about a few things, namely the state of the market and also where you can possibly still find some growth. Okay, currently the market is still in an uptrend. Basically what we're seeing is the S&P is testing its September highs, which were 1474. The S&P's already had a new closing high. However, it still needs to take out those highs and it's meeting some resistance right there. We should see some support on the S&P at 1450, 1420 and 1400 below that. And if we stay above this 1450 level, the market's still in an uptrend. The NASDAQ market, we're seeing some support at the 3080 to 3060 level. That should hold. Next upside resistance around 3175 to 3200. Now the NASDAQ market's held down a little bit by the action of Apple. Apple's not acting very well, and that's a big component of that. Because we see the small cap indexes like the S&P 600 small cap index is at new highs, as is the Russell 2000 index. We also see really good action in the Dow Jones Transportation Index hitting new recent highs. So all this kind of confirms our uptrend. Also, an interesting thing is, as the market's been consolidating its huge gains over the last 2 weeks, it's been slightly moving sideways ever since we had that big New Year's pop. A lot of leading stocks continue to move into new highs, and again, that's a very good thing. However, there still are some headwinds in this market, namely sentiment surveys from Investors Intelligence and American Association of Individual Investors shows that there's extreme bullishness. Now, this is sort of contrarian indicator. Usually these indicators spike when the market's near a top and the market may roll over. However, keep in mind though, these are secondary indicators. Price and volume on the general indexes and leading stocks is your main guide. Now, this week, earnings season kicks in, so the market's going to be waiting to see what CEOs say from the companies looking forward. And that'll be the main thing. What they see as business prospects going forward. Also, another big thing going on is China. China seems to be leading the market. And this Friday, we're going to get GDP news out of China, retail sales, and industrial production. Now, also overnight, last night, the Chinese government's allowing foreigners to be more invested in their stock market. This can also give another boost to Chinese stocks. So one of the things to consider here, let's just say these tax increases that Americans will be facing, what if it slows down the American market? Where can you look? Well, one of the places you might want to look is to China, as China's moving forward. Now, some Chinese stocks, some of the better Chinese stocks right now is called Qihu 360 Technologies, symbol QIHU, and China Lighting Corporation, symbol is HTHT. Now, if you remember, Chinese stocks are pretty volatile. They were pretty hot in 2003, they were hot in 2009, and pretty much due to accounting scandals, the market has pretty much discounted them altogether. However, there seems to be a comeback now in these Chinese stocks. Now, Qihu is a little bit extended. It broke past a $26 area a few weeks ago. It's trading in the $30 area, so it's a little bit extended. That wouldn't be a good place to be buying it right now. However, you do want to keep it on your watch list because the last 3 quarters have an average growth rate of 133% on its earnings, and going forward, estimates for next year at about 48%. Now, the other stock I mentioned, China Lighting Corporation, symbol HTHT, right now is Friday moved past its recent consolidation, 17.5 buy point, and this morning it's trading at about 1850. It's buyable up to about 1850. Friday's volume was huge. It was 600% increase on its volume as it cleared at 17.5 buy point. The last 2 quarters, earnings came in at about 63% and 79%. Earnings for next year are estimated to grow at about 51%. And basically what they do is they own about 600 lodging and their franchises through China, through 100 cities, and they cover about 71,000 rooms. So there might be some growth in the stock. That's something you can consider going forward, but of course let price and volume be your guide. And right now, full disclosure, I don't own any of these, but I might purchase these in the near future. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a good trading day.